Welcome to the deep dive, where we cut through the noise and get straight to what truly matters: real estate. It's something everyone's interested in, right? Whether you're uh, dreaming of buying, maybe strategizing to sell, or just trying to make sense of the economic tides, understanding property markets is key. And let's be honest, these markets can shift faster than, well, faster than the desert landscape changes with a monsoon. Even in places that seem perpetually sunny and stable, there are often these unique dynamics happening, kind of hidden just beneath those big, bold headlines, and we're here to uncover them for you. Okay, let's unpack this. We're diving deep into the Southern Arizona real estate market, specifically for July 2025. Our insights are coming straight from the latest comprehensive data. It's compiled from the MLS of Southern Arizona, the Tucson Association of Realtors, and also the Green Valley Sahuarita Association of Realtors. So our mission today is pretty simple. We're going to slice through all those numbers, pinpoint the most significant trends, and uncover any surprising shifts. Things that paint a clearer, more actionable picture of what's really happening on the ground. Think of it as, your shortcut to understanding a complex market, whether you're maybe a potential buyer, a seller, or just really curious. So you've looked through this fresh data. What's the very first big headline that jumped out at you?
Well, looking at the overall Southern Arizona market, what the report calls MLS SAZ, for July 2025, the main trend really is a distinct cooling, a noticeable one. We're seeing declines across several key metrics when we compare this July to, well, both last month and July of last year. It's a pretty clear shift.
A definite chill in the air, then, instead of the usual summer heat. Can you give us a sense of the scale here? What were the key numbers looking like?
Absolutely. The total number of sales, that landed at 1,319 for July. Now, that's down 6.1% from June, and it's also a 3.7% drop from July of last year. New listings showed a similar pattern. There were 1,819 new properties hitting the market. That's also down slightly, both month over month and year over year. So yeah, fewer transactions happening and maybe a little less fresh inventory popping up.
Okay. And what about prices? That's always the number one thing people ask about. Are prices coming down too?
Prices are definitely mirroring that cooling trend, yes. The median sale price, it reached $354,050. That's a 1.65% decrease from June, and it's a 3.0% drop compared to July of last year. The average sale price, $426,647, saw similar declines. And even the price per square foot at $220, that was down 2.8% year over year. So yeah, across the board, the price pressure we've gotten used to, it's definitely easing off a bit.
That's a lot of downward arrows. But beyond just the sales and price figures, what's the single most critical insight this report gives us about how the market is actually behaving right now? Where's the real sort of strategic shift?
What's really fascinating here is that while prices and sales volume are, dipping slightly, the increase in days on market DOM, that truly indicates a significant shift. A shift in the power, really. The median days on market, it jumped up to 38 days. Now, that's up 2 days from June, but it's a very significant 10 days longer than July of last year. For you listening as a buyer-seller, this is a huge change. The market's pacing. It shifted from like a frantic sprint to maybe more of a thoughtful jog, giving buyers more time and more leverage.
Right, 38 days now, a full 10 days longer than last year. Wow. For anyone who remembers that, crazy act now or lose out market, this
Yeah.
must feel totally different. So, what does this longer selling time practically imply for both buyers and sellers? I mean, in terms of negotiation, strategy.
It implies a pretty significant rebalancing, I'd say. For buyers, your power, it's just gone up quite a bit. You're moving from a scenario that was almost take it or leave it to more of a shop around and negotiate market. You've got more inventory to look at, more time to do your homework, your due diligence, and probably more room to negotiate on price and terms. For sellers, this means patience isn't just nice to have. It's a critical part of your strategy now. Forget those super quick sales from last year, pricing it right from the start, making sure the home shows well, and crucially, being willing to negotiate. Those are non-negotiables now because buyers have choices and they have time. That whole speed dating market, yeah, that's officially over. We're also seeing the average percentage over asking price staying negative. It's at minus 2.15%.
Okay, you mentioned homes selling below asking. So, when the report says negative 2.15% over asking, what does that actually mean for, say, a buyer putting in an offer?
It means, on average, homes are closing for 2.15% less than their list price. It's basically like getting a small discount from what the seller was asking. Now, the report does note a tiny improvement, about 0.31% better than last month and last year, which means that gap between asking and selling price is shrinking just a bit. But the critical point is homes are still selling below their initial asking price on average. This just underlines that buyers are holding more cards than sellers right now.
That's a really crucial insight into the overall market shift. But I'm curious, does this cooling hit every price point the same way? Or are there some, surprising pockets of activity or maybe bigger slowdowns when we slice the data by price range?
Ah, that's exactly where it gets really interesting because, the market isn't just one thing. It's like a collection of mini markets, each doing its own thing.
Hmm.
And what we're seeing is, yeah, some segments are clearly struggling more, while others are showing surprising resilience, kind of defying that overall cooling trend. For instance, sales numbers are way down year over year for those mid to high price points. Homes in the $400,000 to $499,000 range, down 15.2%. The $500,000 to $599,000 range, down 27.3%. And the $800,000 to $999,000 range is really struggling, down 28.2%.
Wow, that's a pretty steep drop in those middle to upper brackets.
Right.
What specific factors do you think are making those segments struggle so much more, even as the overall market cools? Are buyers just pulling back there?
I think it's probably a mix of things. Higher interest rates are definitely hitting purchasing power, right? Making those mid to high prices just less reachable for a lot of people. And maybe buyers in those ranges are also feeling less pressure, less urgency, given the overall cooling in the longer days on market we just talked about. They're probably more willing to wait for a better deal, or they simply have more choices now.
Understood. Makes sense. But then you mentioned surprising resilience. So where is the market actually maybe not heating up, but holding strong?
Right, this is the counterintuitive bit. Yeah. Sales actually increased in the entry-level market. The $0 to $199,000 tier saw a 5.8% increase in sales, and the $200,000 to $299,000 range was up 6.8%. So that suggests affordability is a huge driver, right? Buyers are actively seeking out those more accessible options. But the real surprise, what really shows this market bifurcation, is at the luxury end. The $700,000 to $799,000 segment saw sales jump 19.4%, and the $1 million to $1.19 million segment, it surged an impressive 29.4% year over year.
Huh. So the overall market is cooling, but we have these two ends, entry level and luxury, where sales are actually up. What's driving that high-end growth? Are luxury buyers just less worried about interest rates, or is there something else going on? And you said something was notable about that $1 to $1.19 Mecca group.
Yeah, you hit on it. Luxury buyers often aren't as sensitive to interest rate changes, or they just have more cash or flexible financing options. But what's also really notable is how that specific $1 to $1.19 MIC per segment saw a positive change in its percent over asking figure. It went up by 2.76% compared to last year. So that points to some competitive bidding happening within that specific luxury niche, even while the broader market sees homes selling below asking. It suggests, a mix of strong demand from affluent buyers and maybe a limited supply of the really desirable properties right at that top tier.
That really paints a more complex picture than just cooling. Okay, so how does all this affect inventory? Are we seeing supply levels shifting differently across these price points too?
Yes, absolutely. Inventory levels are just as varied as the sales activity. Overall, active listings stood at 5,195 for Southern Arizona. That gives us about 3.94 months of supply overall. But that number is far from uniform across the board. Those lower to mid-range homes, say $200,000 to $399,000, they had a tighter supply, around 3.2 to 3.6 months. But when you get to the higher price points, like that $800,000 to $999,000 range we mentioned, was struggling with sales, we're looking at a hefty 7.62 months of supply there. And for homes over $1.4 million, it's 6.43 months.
Wow. 7+ months of supply in some high-end brackets. So what does that mean for someone selling a high-end home, or for you if you're a buyer looking in that segment? Is that officially a buyer's market then?
Oh, absolutely. It signals a very different game at that high end. 7 months of supply is generally well into buyer's market territory. So for you, if you're a buyer in those luxury brackets, it means you've got plenty of selection and significantly more leverage to negotiate. There's really no rush. For sellers, it means patience. It's key. Impeccable presentation, realistic pricing, those are absolutely paramount. This isn't a market where all properties are flying off the shelves anymore. The higher end clearly has more options and less urgency for buyers.
We've seen how prices and demand are sort of fragmented. Does that fragmentation also apply to the type of home selling? Or are all property types, single-family, townhouses, condos, experiencing the same shifts?
That's a great question. And yeah, we definitely see some interesting differences across property types too. For the broader Southern Arizona market, the general downtrends continued for single-family homes and townhouses compared to last year. Single-family residence sales were down 3.5%, and their median price dipped by about $12,500. Townhouse sales were down 3.6% as well. Pretty straightforward cooling there. But then We have some real outliers, some unexpected performers that kind of buck these trends.
Okay, intrigued. So what are these unexpected performers? Which property types are behaving differently in this cooling market?
Well, we saw some surprising strength in the more affordable categories, actually. Manufactured homes, for instance, saw sales increase by 6.3%. However, their median sale price dropped quite sharply by $36,000. So more sold, but for less money. Condominiums also presented a bit of a puzzle. Sales were down 13.4%, quite a drop, but their median sale price actually increased by $15,000. And maybe the most surprising, mobile homes. Sales were flat, made a 0.0% change, but their median sale price increased by $20,000. And they saw a really strong positive change in the percentage over asking up 4.2%.
Huh. So lots of counter trends there. Mobile homes getting more over asking, condos getting pricier despite fewer sales, manufactured homes selling more but cheaper. Why might manufactured and mobile homes specifically be seeing these unique shifts? Are buyers actively seeking them out now?
I think this is very likely a reflection of affordability pressures and maybe changing buyer priorities. With median and average prices in other segments, declining slightly but still pretty high, buyers might be actively turning towards more accessible options, like manufactured and mobile homes. That sharp price drop for manufactured homes could be attracting buyers who are really focused on value, while positive over-asking for mobile homes suggests pretty strong demand in that specific niche. Maybe from buyers with really tight budgets or specific location needs who are willing to pay a bit of a premium right now. It really highlights how value and entry-level price points are driving decisions in certain pockets of the market.
That's fascinating, seeing how different property types are weathering this. Now let's bring it back to location. How do these trends play out when we zoom in on specific regions, like Tucson versus Green Valley, Sahuarita? Are they telling the same story?
Oh, definitely not. They tell quite different stories, actually. In Tucson itself, the median sale price for July 2025 was $365,000. Which interestingly was basically flat year over year. So that suggests a more stable pricing environment in Tucson proper compared to the broader southern Arizona area, which saw that 3% drop. However, sales in Tucson were still down 5.2%, and the median days on market increased by 9 days, hitting 36 days. So homes are still taking longer to sell there too. And interestingly, the buyer demand trends by price range in Tucson, they pretty much mirrored the overall MLS SAZ market, continued increased activity at the luxury and entry-level ends.
Okay, so Tucson is a bit more stable on price, but still slower. Now, let's zoom in on Green Valley and Sahuarita, what the report calls GVSR, because you hinted this area tells a very different story this July. It sounds like a real market of contrasts.
It truly does. GVSR experienced a surprising trend. The number of sales there actually increased significantly, up 9.8% year over year, hitting 145 sales. This goes directly against that broader cooling trend we've seen everywhere else. It almost looks like a mini boom in activity down there.
Wow, a 9.8% increase in sales volume for Green Valley Sahuarita. That's substantial. But you call it a market of contrasts. So more sales. But what happened with prices in GVSR? Did they surge too?
No, and this is where it gets really interesting. It raises important questions about affordability and value in that area. While sales surged, the median sale price in GVSR actually dropped quite considerably. It fell to $310,000. That's an 8.8% decrease from last year. The average sale price also fell by 12.1%, and the price per square foot was down 7.8% to $189. So this combination of big jump in sales volume alongside a notable drop in median price, it suggests maybe GVSR is offering more accessible price points now. Or perhaps it's undergoing a sharper price correction than other areas, and that's attracting buyers looking for, more bang for their buck. What's particularly interesting, though, are the demand shifts within GVSR.
Okay, so GVSR is selling more homes, but they're cheaper now. What specific price points or property types are driving that demand surge within Green Valley Sahuarita?
Definitely the lower end. GVSR saw huge sales increases in its lower price points, the $0 to $199,000 range. Sales were up an incredible 33.3%. The $200,000 to $299,000 range surged by 87.0% year over year. 87%. And these lower ranges also saw some positive changes in their percentage over asking, suggesting some competitive interest there. In terms of property types, townhouse sales in GVSR shot up an astonishing 88.9%. Just massive growth. Sales volume for townhouses was up over 70%, even though the median price for them dropped by $39,500. Condominium sales also increased by 25%. So clearly, the affordable segments and specific property types like townhouses are drawing a lot of buyers in GVSR.
That's incredibly specific activity within GVSR. Were there any even more like hyper-local insights within Green Valley itself, maybe specific neighborhoods behaving differently?
Yes, actually. Very specific pockets showed distinct behavior. Green Valley Northwest, for example. Sales surged by 60% there, with volume up 63.6%. Huge jump. But in contrast, Green Valley Southwest and Green Valley Southeast, they experienced significant drops in both sales volume and median sale prices. It's almost like you need GPS coordinates for specific neighborhoods now, not just the town name, to really get what's happening. It just underscores how vital it is to look beyond even regional averages and drill down to that micro-market level.
Absolutely. It's not just Green Valley, it's Green Valley Northwest. Okay, and finally, let's just quickly touch on how home sizes are performing across southern Arizona overall. That often tells us something about different buyer pools too, right?
Right. Small versus large homes also tell a very clear story, and it mirrors that market bifurcation we talked about earlier. Homes under 999 square feet. Sales actually decreased quite a bit, down 20.8%, and their median price dropped by $28,000. This could be, a mix of factors, maybe higher interest rates hitting those entry-level buyers harder, the ones who might have targeted smaller, maybe older homes. But mirroring that luxury trend again, larger homes, specifically those between 4,000 and 4,999 square feet, saw sales literally double, up 116.7%, and their median price jumped by a huge $250,000. And homes even larger, over 5,000 square feet, their median price increased by $390,000. And they saw that strong positive change of percentage over asking, up 6.9%. So yeah, luxury buyers aren't just active, they seem to be paying a premium, especially for those larger properties.
Okay, so let's recap this deep dive into Southern Arizona real estate for July 2025. What we're seeing is an overall cooling trend, right? Declining sales, declining prices across the broader market. Days on market are up everywhere, which is pushing buyer leverage higher and really demanding more patience from sellers. But, and this is the big but, beneath that surface, there are these strong counter trends. Entry level and the luxury price points. They're showing surprising resilience, even growth in sales, while that middle range is struggling. We also saw some really unique performances from certain property types, like manufactured and mobile homes, seems clearly driven by buyers chasing affordability. And then Green Valley Sahuarita really stands out as this market of profound contrast, increased sales volume, yeah, but with significant price corrections happening, especially in its lower price points and townhouses.
Yeah, and understanding these nuances is just crucial for anyone involved in the real estate market right now. Whether you're a first-time buyer looking for an opening, maybe a seasoned investor trying to spot strategic shifts, or even just keeping an eye on your local economy, the data really tells us that those broad generalizations, they can be incredibly misleading. You absolutely have to dig into the details.
Right. As we've seen, the market is never just one thing. It's more like a tapestry, right? A collection of micro markets, each with its own rhythm, its own opportunities. So when you consider these sharp differences we found for July 2025 across price points, property types, regions, I mean, from the surprising strength at the very bottom and very top ends to Green Valley's kind of contradictory surge in sales and dip in prices, what does it make you wonder about the future of affordability, maybe investment, community growth here in Southern Arizona real estate? Where do you think these micro trends might lead us next?